I'm Diego Sanchez, COO of HW Media, and this is 10-Minute Talks. My guest today is Ted Smith, CEO of FirstClose. Ted, welcome to 10-Minute Talks.
Hey, Diego. How are you?
I'm doing great. It's so good to have you on. Before we dive in, could you give a 30-second introduction of yourself and FirstClose?
Sure. Yeah, thanks for having us on, Diego. I appreciate the opportunity to be here. Yeah, so just from a background perspective, my brother and I started the business back in 2000. So we've been doing this over 2 decades now, and super excited about where we are and what the space is providing us with opportunities to leverage the 2 decades of tech that we've been building. And when we think about the industry and where it's been and where we've come from, it's exciting to see the automation and all the things that we do to help lenders close loans faster. We're taking lenders from 45 to 60 days on a home equity loan all the way down to 7 days or less. We've got over 50 employees that work for our company today, and super excited about just being here.
Yeah, what attracted you to building technology that facilitates home equity transactions?
Yeah, what really attracted us at the beginning was just providing everything full circle. Before the mortgage crisis, home equity was booming, and that kind of became a taboo product for a little while. But when the interest rates rose, what we saw in the industry was just an amazing opportunity to take the tech that we've built and apply that to the demand that is needed. Again, taking lenders from that average 45 days down to 7 days or less. And when we think about just kind of the tenacity that it's taken over the 20 years that we've been in business, we look at different things in the market. According to the latest report from Redfin, nearly everyone with a mortgage that has an interest rate below 6% is really kind of staying put on their refinances. From an equity perspective, it's the next least expensive way to get money, and we help our lenders in a lot of different ways using tech and various products and services that we've seen over the years. Certain customers take advantage of, and now we've packaged that in a way that really streamlines the entire process and gets the borrowers their money as fast as possible.
How are you doing that from a technology and service perspective? It sounds like you're driving 80% decrease in time to close for these home equity transactions. What's the special sauce that's helping you do that with your clients?
Yeah, it's really just taking what is available to the industry from a tech perspective. Certain products and services, an example would be automated valuations. Automated valuations have been used historically, but when we think about automating things to the hilt, what we do is we take the AVM that is used in underwriting, we push that to the very front of the process so that the borrower experiences no change in the valuation and the equity that the lender is making available. In addition to the products and services that we use to help create automation, we've built just in the last few years a point of sale solution that provides full transparency to both the borrower and the lender while constantly updating the loan origination system so that it becomes a communication factor in a way that reduces the time to order services, receive feedback. We populate a lot of things into the LOS so that certain decisions are made. There's instant decisioning. There are automation tools that are used in a lot of different realms. From a product perspective, title is a good example of that. Valuation is another good example of taking products and services that have largely taken 2, 3, 4 days and taking those down to providing those with instant results.
So, what is the ideal customer profile for the FirstClose platform?
Yeah, it's really anyone that's currently doing or thinking about entering the home equity space. The majority of our customers, we've got 250 uh, existing customers and growing, mostly community banks and credit unions. We do have some very large tier one and tier two IMBs that are engaging now as well, but it's not a one size fits all from where we sit. There are certain lenders that may see a need in automation on the back end from what we call gateway perspective. There are other lenders that might see the automation that we have in our POS solution. And so it really is a mod. We built it modularly in a way that gives the lender the ability to look at their existing processes, figure out how they can use our tech to create that automation, create that speed to closing, and then we customize the solution to give them the ability to tap into this 7 day or less closing time frame.
You mentioned the Redfin report that talks about what is essentially a mortgage rate lockdown, right? Like a lot of folks who may have wanted to sell their house just aren't going to do it because they will have to go out and get a new mortgage for their next purchase that's double what their existing mortgage rate is in a lot of cases. So the housing market has been pretty challenging on the first mortgage side. What are you seeing on the home equity side? Is it a different dynamic?
It's a very different dynamic. According to the Fed, the home equity reached a high of 27.8 trillion dollars. That's a lot of equity in people's houses that's sitting out there. And from where we sit, you think about back in 2020 and 2022, according to the most recent MBA study, the market went up 50%. From 2020 to 2022, and we've seen that in our customers. We had record highs in those years, and again record highs this year. And TransUnion, as another matter of statistics, is projecting another 25% increase in equity lending this coming year.
So the difficulties on the first mortgage side are almost creating opportunity for you and your customers and prospects on the home equity side.
Yeah, that's exactly right. So while the market is beginning to show signs of a shift in 2024 as projected, there's plenty of opportunity. Again, considering 90% of owners are sitting on mortgage rates below 6%, mm-hmm. We think about that in 80% of those numbers are at 4% interest rates or below. So when we start thinking about the Fed reducing rates, and if it gets that back down even to 5%, a lot of these existing consumers that have rates in the 4% or less are still going to need money. Essentially, we think about it. Our lenders tell us all the time. It's kind of about debt consolidation. It's about home improvement and putting in the new kitchen or putting in a pool. Borrowers still need money to operate, and home equity is the next least expensive option to get access to that cash. And they're just not going to touch their first mortgage loan and cash that out if rates are above what they have on their first.
Absolutely. So it's great to talk to somebody who's got some opportunity right now. What is your growth strategy for the rest of this year going into 2024 as you look at this opportunity on the home equity side?
Yeah, we're laser focused on our existing FirstClose equity solution, which includes point of sale, our borrower portal, order management, and closing. The market still has some challenges in terms of economics of doing HELOCs and HE loans, trying to offer those at no cost or low cost. But using our technology, it creates a situation where lenders can do more with less. They leverage the tech. They're able to essentially create an environment that many of their people can concentrate on other things, while we do a lot of the heavy lifting from a technical automation standpoint.
Well, Ted, it was so great to chat with you today. Thank you so much for joining me.
Yes, thank you, Diego. Appreciate you having me on.